we're joined by Kirian von Hest, also known as Deso. And he has a lot of big stuff that he wants to share with us today. And he's going to talk about some opportunities in 2021 that could be explosive, could see some huge gains. But he's going to tell us about those now and how potentially we could have the opportunity to get into some of them early. So, Deso, my first question is, how much Tether should I buy this year?
Depends on how much money you want to lose, really. I mean, it's a very poor investment if you just want to buy Tethers and hold it, because it's supposed to be a stable coin. So it's supposed to be at 1 until everybody discovers it's a scam, then it's going to go straight to 0.
Right. Now, real question, what are some of your best ideas?
My best ideas. Well, shall we get into the top 10 investments of 2021? And hopefully I'm right. Now, this is not in any particular order because there's no way to tell which one does best, but it's everything I think will do well with a nice bonus at the end. First one, rare earths. I think rare earths are going to do very well. Well, they've already done very well. I own the stock Linus. Last time I checked, it was up about 60-70%. Ever since the Trump order that he wanted to diversify the rare earth chain from China. And since China dominates 80% of the market, before that, I invested in rare earth miners that were located specifically outside of China. And they have done pretty well for me. But we are not even close to how much is going to go up in the future, because we are just at the start of the commodity bull run. Anything that comes out of the ground will benefit, just rare earths just as well. But I'm pretty sure the animosities between the US and China will continue. So it's only a matter of time before China institutes export caps again, especially since rare earths are also used in military applications, specifically high-tech military applications. And why would they help make things cheap for the US Army? So I expect export caps to be instituted at some point next year. And at the moment they are, this stuff's going to go through the roof. If it hasn't already, because neodymium has already almost gone parabolic.
How could we play rare earths? Is it to go after the miners? Is that the best way?
Yes, but specifically, again, the miners that are outside of China. Because, again, if China institutes rare earth caps, they basically shut down 80% of the market, which means the remaining 20% is going to go through the roof. Now, I would advise to divest like any smart investor would, and not just go for the juniors, but, buy some of the majors, buy some of the juniors, and get some dividend income to invest in what's going to go up next after the rare earth caps. Okay. Naturally, I'm just going to get ahead of this question because everyone's going to ask it. When would you sell? I am not going to sell my rare earth miners outside of China for at least 2 years just to see what's going to happen. Naturally, if I see some sort of a peak, I would sell, but, follow my Twitter for that one. But I don't see that happening anytime soon. China's stockpiling resources like mad, and it's kind of amazing they haven't instituted export caps yet. But I'm figuring they're waiting for the next US government to be installed, considering Biden is considerably less anti-China than Trump was. He has to be because Trump was anti-China and he doesn't like Trump. So they're basically waiting for a weak leader to take the throne, as far as they are concerned. And I think afterwards they will input export caps. And if there's a conflict, an actual conflict, that the supply chain will come under threat. It's just going to go further.
Yeah, so that's my question. So Trump called Biden a puppet of China, right? So if that's true, what would cause there to be a conflict between the US and China that would involve these rare earths going up as a scarce resource?
Well, any conflict would push it up, but just basically Taiwan. It's going to be Taiwan. Everyone knows it's Taiwan. China has been moving a lot of forces on the border with Taiwan across the strait. Well, it's going to be Taiwan soon. Anyway, it's going to be inevitable that there's going to be a war over Taiwan, because in Taiwan, the Taiwan Semiconductor Manufacturing Company, or TSMC, is located. And currently, they have by far the most advanced and the most of them lithography machine, which you need to make highly complex CPUs. And China is basically just a decade or two behind. But because Intel has been messing about with their own fabrication process, Intel's actually also about half a decade behind on TSMC. So basically, we're in a situation where all the CPUs and graphic cards in the high-end smartphones are all being produced on one little island off the coast of China, and China's building up a massive military across of it. What do you think's going to happen? What do you think the US is so gung-ho about protecting Taiwan? China wants those machines, and once they have them, they are going to pull ahead of everyone. This is basically a war for all the marbles. This is one of two things is going to happen. Either they're going to capture those machines, or they're going to bomb the hell out of it so nobody else can have them either. Now, my own country, actually, a Dutch company called ASML, was the only one who invested in 7-nanometer lithography machines. And they can build more. But they are building like 8 or 9 a year. So if TSMC gets either destroyed or captured by the Chinese, that's going to set the whole world back as far as anything below 40 nanometer for 3-4 years minimum, just to get back to the point where we are now. And that's only if the factories of ASML don't get bombed by some sort of hypersonic missile. That's going to set us back decades. So, yeah, I am pretty sure there's going to be a war over that island. I'm pretty sure the US is going to be on one side, and I'm pretty sure that China is going to be on the other. Since China controls 80% of the rare earth market, well, I would invest in miners. Simple as that.
So if there is a conflict, you're saying China would hold back on the rare earths supply. We would be...
No, they will do that long before the conflict. If you know there's going to be a conflict with your enemy and you control a large amount of supply of your enemy, would you really wait till the war until you cut them off?
So when they do that, I mean, that's going to cause scarcity in the US.
Well, that's the thing. Rare earth metals aren't actually rare. They're found all over the place. The reason why they're called rare earths is because in industry, they cannot be replaced. For example, if you have a computer, you have a heatsink on your CPU, and a pretty large one these days. The fins of the heatsink are made of aluminium, while the heat pipes and the base are made of copper. The reason for that is very simple. Aluminium and copper both conduct heat efficiently, but copper is better than aluminium, but it's also heavier. The earlier heat sinks were almost pure copper, and they started getting pretty heavy to the point where they started more or less bending the motherboard. So modern days, we have copper heat pipes, which very efficiently transfer the heat thanks to the fluid inside those pipes. But the fins are made of the lighter aluminium, which is fine because there's a lot of fins to spread the heat around. And it turned out to be the best of both worlds. Well, for rare earths, it would be impossible. It would be like there would be no other metal that conducted heat. So we had to make all heat sinks out of copper. Neodymium is the best example because permanent magnets are all made out of neodymium because it is by far the strongest permanent magnetic material we found. It's like 3 or 4 times more stronger than the iron core ones. So that's the number I pulled out of my ass. But I know it's a lot stronger. So if you want to use permanent magnets in electric vehicles, you have to use neodymium. And that's where the rare comes from. So naturally, if China restricts the supply of neodymium and the US wants to build its electric vehicles, well, it's going to have to pay through the nose for the remaining 20% of the market that China doesn't control. And again, rare earth caps are a lot more palatable as a geopolitical pressure thing because China also produces something like 87% of the US's antibiotics. Naturally, in a war, that would stop immediately. But as long as you're not in a war, if you were to stop export of those antibiotics or make them really expensive, that would directly affect the health of the general population, and that would put them against you. So the general population would be angry at you, and they would be happy to fight a war. But rare earth metals is very abstract. They're found in everything, but in minute amounts. And if China just export caps it, well, prices in America will go up for some things substantially, But currently, thanks to inflation and soon hyperinflation, they're not even going to notice that in the general population, at least. I mean, the military will, and the general population will notice that the US has to spend far more in the military now, way too late. The US doesn't even understand that spending $700 billion on the military right now is just suicide financially. But hey, every to each his own. So, yeah, that is the most likely political pressure measure they will employ before the war with Taiwan even starts. If we get a blue sweep, if Georgia goes to the Democrats and they get the blue sweep, then the financial future or the financial collapse of the US will happen a heck of a lot quicker. And I think China would waste no time after the new inauguration to enact its own policies, because more expensive rare earths and an exceptionally frivolous spending Congress, China won't even need to start a war. America will destroy itself.
Yeah, I mean, now that Trump's no longer, he's China's biggest enemy, and now that he's not at the head and we have a dove on China, we'll see what they try to get away with, right?
Yeah, well, look at it this way. The trade war from Trump has hurt America more than it has hurt China, because unlike rumors, China did not pay for the tariffs. It was the American industry. However, and by the way, America has lost the trade war, especially since the virus, because the trade deficit has absolutely cratered. But regardless from that, it did hurt China. Less exports, more expensive. So it's not like the Chinese economy didn't suffer anything. They suffered greatly. It's just that America suffered a little bit more. So naturally, China is absolutely happy to see Trump go, because they can basically hurt Biden more, and Biden won't do anything back, or much less. So why would you ever help your enemy elect a strong king if you can just sit back, do nothing, have him elect a weak one, which you just kick his ass in battle? You think he's going to make smart battle decisions if he makes smart or stupid fiscal decisions? You think somebody who says he's going to spend, who's going to run at the deficit to like 5 trillion with his 5.4 spending plan or whatever it was, you think he's going to make smart military decisions? Hell no. Hell no. The American wars have been a disaster ever since Desert Storm was done pretty nicely. So let's say 2003.
Yep.
So, and it's not even going to come to that. Again, America is standing on the precipice of hyperinflation. If China just cools it and only pumps up prices, doesn't do anything to affect the general population in general, then nobody's going to notice until America's broke. And America's already broke.
That's what's very kind of scary if you're in America, right? Because we're so vulnerable financially and we've issued so much debt. I just don't know if we could handle a large scale conflict. And it seems like China is kind of waiting and watching and just enjoying all this debt buildup. And
I can basically answer this question for you right now. I have been saying since February this year that the only paths forward were either a US civil war or a conflict between China and the US. And the trigger for this is hyperinflation. Basically put, you might have heard of the saying, an army runs on its stomach. Well, a war runs on its finances. Ever since the Romans, we've had a professional army. That basically means one thing. Army don't get paid, army don't fight. So if America doesn't have any money to pay for its army, then the army is not going to fight. In fact, it's just going to dissolve. Carriers and such is going to be sold off to countries like China to get a little bit of actual money back, and you're going to ask gold for it too, because that's just the reality of it. If you can't pay for the army, those soldiers are not going to fight for you. Now, you always have a core of strong, loyal people to whatever country, so it's not like you immediately get invaded. And America has a uniquely defensive position. America's not going to get invaded, ever. However, if hyperinflation triggers and there isn't a war with China, then you can no longer pay for your military. All the people around the world on military bases in America are going to come home. I don't know how big the American military is. It's like 1 million soldiers or something. Yep. If you count everyone and all the bases in Germany and South Korea and all that. Well, you can't afford those bases either anymore. You can't afford to station people overseas. So if hyperinflation triggers, what's going to happen is you're going to get a large mass of young men highly trained to kill, all coming home to a country that's ruined. They're going to be angry, and the country's filled with guns. How do you think that's going to end? Not pretty. So the reason why hyperinflation is the trigger is because if the US gets embroiled in a major conflict with China, the US knows NATO is not going to support them militarily beyond support material because no one is going to want this world war. But they can force NATO members to support the dollar with their own finances and foreign exchange reserves. All right, if you won't fight, at least give us money. Basically, lend-lease in World War II in reverse. That is acceptable to Europe. So that is what's going to happen. Naturally, because the dollar now has the forced support of basically the Western world and all the rich countries outside of China, the dollar is just going to be easily supported throughout the war. America can print basically anything it wants. It would be a free license to print. Right now, America does not have that license, even though it looks like it, because we all know there's a point where the rest of the world is going to say, yeah, enough. It's been enough. You print too much. That's the reason why they go for a 800 billion or 900 billion stimulus and not a 900 trillion stimulus if it doesn't matter. If there's a war between China and the US can easily run a $10 trillion deficit without any problems because the rest of the world is supporting that deficit. In effect, every country will be a war economy, but rather than investing in their own production, they will invest in American production. And actually, if you think ahead, this is actually the best outcome for America because the dollar is gone. You've already printed too much. 75 years of government mismanagement is not going to be solved in 5 to 10 years. Never. It's going to take a generation. However, if there is a major conflict with China and NATO is forced to support the dollar, America can invest those foreign currencies in building up factories, which they need to fight the war. But once the war is over, which it always is because time moves forever forward, at some point it'll end. If America doesn't get bombed to shit, those factories will still be standing. So the currency might hyperinflate immediately after the war, and it will happen. But hyperinflation is also a pretty short process. Weimar Germany, the famous example, lasted 6 months. So after America's blown up, after about a year and the economy stabilized, well, the buildings will still be there. The factories will still be there. The machines will still be there. The knowledge to produce stuff will still be there. The skilled labor will still be there. So if they just let the debts clear and they start over with a new currency backed by something sound, well, all the factories are there to just reboot and kickstart the economy. It would cut the depression by like 10 years, 10 to 20 years. That's actually the most financially sound outcome. War.
I love how deep this conversation has gone so fast. It's fantastic. It seems like a great...
Well, you asked.
Yeah, it seems like a beautiful setup for commodities. So bottom line is you're saying the conflicts with China and the bullish setup for commodities, hyperinflation, are going to be wind in the sails of the rare earths. And the best way to play them is to buy companies like miners, right?
Yeah, Linus is the one I have because it has mines in Australia and a processing plant in Malaysia. I expect most of Asia to stay out of the war because anything between India and China is not no. They're just you have fun.
Right.
So in that sense, but there's also rare earths in America. There's rare earths. Maybe you can even find them in Europe. I don't know. But like I said, you can find those things all over the place. Just don't buy a miner inside of China. Buy one outside of China. That's it.
Sounds good. So how about number 2?
And for 2, we're just going to go with the usual suspects that we all know will do well, so I won't spend too much time on them. Gold and silver. Now, if you want the best asset between the two, silver. There's been a mining deficit for years now, and the solar industry has been a big demand for silver while it's been in the bear market. So there's a giant undersupply right now. That is masked by the COMEX, but that will blow up next year as well. Guaranteed. Because everyone's going to want silver considering where this is going. China's actually buying silver as well as a strategic commodity, but we talked about China enough. However, the reason why I say silver is best is simply from a practical standpoint. if you have a gold coin, it already costs about $1,900 an ounce. So if you go to a grocery store when the dollar is useless, you're going to get 1,900 of current dollars in purchasing power to spend on groceries. Nobody buys $1,900 worth of groceries. So one gold coin will be just too much to spend in the supermarket. Same with grams, because, well, gold is undervalued too compared to how many dollars are out there. So it currently is $1,900 an ounce, but it could very well be $20,000 an ounce if the world gets its act together and people actually start wanting the stuff. Then 1 gram of gold is already going to be, well, too much to buy a cart of groceries because it buys like 3 or 4. So silver is less rare, more prevalent in the crust. And even though there's going to be a spike because there's undersupply, humans never learn. Humans never learn. There's going to be a massive spike because of undersupply. Everyone's going to jump into the silver market. They're going to fund the most craziest of risky projects. And there's going to be an oversupply. And at that point, the price is going to go down again. So eventually, the silver will never be worth more than gold. If that happens, it's only temporary. You should sell at the top. But basically, when the whole market stabilizes, for 1 or 2 ounces of silver, or maybe 1 ounce of silver even, you can get a full cart of groceries, which you can all eat before they go bad. That's why silver in a crisis is best. Although if you have a lot of money already, so if you were to put some part of your money in silver and buy you a warehouse of bars, it's better to go in gold. It's just value compression, that's all.
So with regards to the silver and gold, obviously the base case for it is that, the dollar is going to be debased. We're going to see hyperinflation and precious metals will go up in dollar terms. How confident are you that we would see hyperinflation, if not just regular old inflation, in 2021?
I'm certain of it. We're already seeing it. The latest interview I did on Palisade Radio, I actually spoke at length about Canada going into hyperinflation and default very soon. Just to recap, the 5-year CDS market of Canada has gone up all year. So basically, the interest rate on the 5-year CDS for Canada is now higher than it was in October, and in October it was higher than it was in January. This is a pattern that is unlike any other country out there. Every single one, even Turkey exploded to about 600 basis points around March, but has slid since then, is now around 300. Every single country has a CDS rate that is down over the last 6 months, except Canada. Canada is now also about as creditworthy, according to the CDS rate, as Hong Kong or Portugal. Portugal's a better example. Aside from all the shit that Hong Kong's been through, Portugal's rated BBB. Canada's rated AAA. They have practically the same CDS rate. Canada is going to be downgraded imminently. So, hyperinflation is going to happen real soon. Plus, the Central Bank of Canada has no gold. And people say Canada will be fine because it's a commodity exporter. They have gold in the ground. Yeah, but that completely overlooks the time element. If Canada needs to mine gold for about 10 years to have any sort of reasonable backing for its currency, well, then I'm not going to touch the Canadian dollar for the next 10 years, am I? And if I was holding any Canadian dollars now, and if they don't have any gold now, I am selling my Canadian dollars now, and I'm not touching it for 10 years. It's that simple. And people are completely overlooking this fact. And I'll get back to that later on the other asset.
Excellent. So what is a third asset that you're looking at in 2021?
One close to gold and silver. It'll go up for the same reasons, but additional reasons as well. It's platinum. Platinum is currently considerably undervalued. And that is purely from logic. So in 2008, with my fresh instincts, I thought, which metals or which commodities are going to do well in the next 10 years, because I can only call this fresh once. And let's see. Well, I picked palladium and rhodium. simply because the rhodium was simple. It was at the historical average, and it ran up before the 2000 crash, ran up before the 2008 crash. So it was going to run up sometime in the future. But palladium was a much simpler bet because at the bottom, palladium was about $200 an ounce, and platinum was $800 an ounce. But a 5-minute Google will show you, if you read about palladium, is that industrial-wise, it is actually just exactly the same as platinum. You can basically interchange the two. So I figured, well, considering both can be used for the same goal, and one is 1/4 the price of the other one, I'm going to figure that they're at least going to equalize. So it's going to go up 4x. And that's what's my call. Now, I hadn't anticipated that palladium would go all the way up to 2,600, which is in itself, again, crazy. But right now, platinum's around $1,000 an ounce, and palladium's around 26,000 an ounce. So based on that alone, platinum's going to go up 2.6 times. And that's not even counting the supply issues that South Africa's going to have, because it's collapsing and 75% of the world supply comes from there. So that's going to restrict supply just when the commodity bull run starts, which is just going to be even more bullish. Of course, palladium's going to go up as well. So platinum's going to it should come close to equalizing somewhere around palladium. It just depends on how efficient both are at the things that they do. But if platinum is much cheaper than palladium, they'll just use more of it, because why not?
Are you saying the conflicts in South Africa are going to disrupt the supply chain?
South Africa locked down at the start of a virus, just like everyone else. But of course, the virus is still there. So they've been brutally repressing any protests against all of that, as well as the continued problems with murdering their farmers, because, they hate the whites, and then they starve because nobody's growing food anymore. And the people that took over the farm, regardless of the color of their skin, have no idea about farming. So they're going to have massive problems. They already have massive problems. It's just going to get worse. And no metal in the ground can protect you from societal collapse. So I'm not saying it's going to happen, but it's likely to happen at this point, and 2021 is not going to look better for anyone. Now, at the same time, hyperinflation might save them because it just start getting a bunch more for the platinum they already have. But yeah, it's not looking good in the short term in any case.
Okay. Just so the audience knows, what is the industrial use case for platinum? And do you see, not counting the hyperinflationary commodity bubble or boom, not counting that, do you see a growth in the industrial use case for platinum?
Very simple, yes. Platinum and palladium are both used as catalytic converters in exhausts of ICE cars. Now, I know some countries want to ban gas cars completely by 2030 or to some states, and I just laugh at that because that's never going to happen. Have fun doing that when you can't spend this much. So electric vehicles are the future, but they're also currently economically unviable because we haven't built the right economy of scale yet for them to be cheaper than gas cars. Naturally, we're still going to want to protect the environment, so we can only do one thing: increase the amount of catalytic converters in cars that we still build. Well, it's just going to cost more metals. But if we legislate it, well, car manufacturers have no choice but to put it in there. So it's as easy as that.
Okay, so it'll be part of the green energy boom in terms of converting oil running cars and using the catalytic converter to lower the emissions from them, right?
Yeah, I mean, think about it. Really, there's no problem with gasoline cars. The problem is with the emissions. If we were to design a system that perfectly filters all emissions from a gasoline car, then there's no problem with the gasoline car. In fact, I would say that the gasoline car would be better because pumping up oil, even with shale, is considerably less damaging to the environment than digging up the entirety of the ground.
Let's hear your number 4.
Uranium. Simple as that. Yeah, uranium. Currently, uranium's still in the bear market, though it's exploded recently. So the bull market has started. My uranium miner that I've been selling information on has done very well. And it's, well, there may be corrections, but that's the same as any bull market. It has started. It's going to go up. I said I was going to go back to this. Same problem as the Canadian central bank has. We're running out of uranium above ground. And recently, the Cigar Lake, the biggest uranium mine on the world, shut down a month because of COVID. So that's just going to restrict supply further. Now, there's no problem right now. That's very important to understand. If a penny stock just goes up 500 times right now, it's nonsense because the reactors haven't been built yet. There are about 55 reactors under construction worldwide, but they're all under construction in Russia, China, Iran, Saudi Arabia, and just about any name you can think of that's not allied with the West. By this reason alone, by the way, the United States is gonna build reactors like crazy in the next 4 to 5 years. Because, like I said, even if there's no open conflict, there's still going to be a Cold War with China. That's already started now. There's unavoidable. So it's going to be very simple. Since the commies are building nuclear reactors left and right, America is incredibly behind when it comes to nuclear reactor technology, and they need to catch up. And the longer they wait, the more they fall behind. So just like with the Soviet mind experiments and the CIA going for mind control in the 60s, America will build nuclear reactors just because the commies are. There's, of course, a legion of other reasons why they're going to do it. Like the above ground stocks are still going to run out in 10 years, so we just need more. The uranium price is only a very small part of a reactor's operating costs. The uranium price is like $30 a pound right now. It can go to 300 and reactors barely notice. So on the one hand, while the reactors still need to be built in order for the uranium to get used, in order for the price to really go up, that is starting. There will be some massive projects next year. John Kerry got named special envoy for the climate, and he signed the Paris Climate Accords as well. And he's been a vocal proponent of nuclear power since 2017, when he held a speech at a university or whatever, where he's told the next generation of scientists, go for it. So he has kept up that opinion. In a 2019 interview even, somebody wondered about the cost of it all because nuclear was supposed to be cost inefficient. That's not it. It's just that every time they built one, the corruption in the construction sector just makes it cost so much, and all the government regulations, of course. So what Kerry said was that people who look at the cost of nuclear reactors often don't take into account the costs of disasters such as hurricanes and tornadoes. Now, I don't think global warming is going to cause more tornadoes, or that's just nonsense. But that doesn't really matter, does it, if he's in power and he sets policy? So if that's the reason why they justify nuclear reactors, what the hell? Fine. We need the damn things anyway if society's going to survive. And if that's the reason how we get them, then we get them. But the point is, we still need to get there. We aren't there yet. So the uranium bull run has started, but there's not going to be a massive spike like up 1,000 times in any short time frame. But we're here to talk about what's going to do well in 2021. And if you want to buy uranium for 2022, you don't have to wait for it. You can do that now.
Yep. So, question on the supply of uranium. Yeah. So there's a shortage above. I mean, maybe not an immediate shortage, but you're saying the supply is running out above ground. Is that because the price has been so low that it just hasn't been mined?
Yep. Very simple. It's run below cost for 5 years. That's got to have effect. Nuclear power is the only power that doesn't generate any CO2. And since CO2 is the freaking antichrist, if California wants any sort of base power without setting its forest on fire, they better get building some reactors. There's more stuff, of course. I mean, the US recently released a draft document in which they specify how they're going to restrict the supply out of Russia, probably because of safety reasons. In any case, they're going to import a lot less uranium, which means this companies mining uranium in the US, again, it's pretty found pretty much everywhere. They're just going to go up in value simply because the US needs it and Russia doesn't supply it anymore.
Something that crosses everyone's mind when they hear about nuclear energy is, well, what about like a Chernobyl event happening?
I have plenty to say about that. First off, let's pick the two big ones, both of them. I'm going to skip 3 Mile Island because I don't know enough of it. And as far as I know, it was really a minor event, especially considered how often the other two I mentioned. So Chernobyl was basically a reactor design flaw from a reactor from the 60s or something like that. And the reason it blew up wasn't because of the design flaw in itself. It was because they ran a very dangerous, ill-advised, and badly supervised test under pressure from central command. And they shouldn't have. It was basically human error upon human error upon human error. They got warnings, they ignored it, warnings, ignored it, and then they blew up. What are you going to do? So that was just basically human failings and a design flaw, meaning that if the design flaw hadn't been there, the reactor wouldn't have blown up. And naturally, that was a design made long ago. On the other hand, if the humans hadn't failed and just kept their ego in check, the whole thing wouldn't have blown up either with the design flaw. But the other one, Fukushima, is an exemplary example of safety in the nuclear industry. Because let me tell you what happened. The reactor was built. It ran for 30 years without any issue in a country that is plagued with tsunamis and earthquakes on a regular basis. It survived a few, no problem. Then after 30 years, they did a safety review and decided that the reactor was good enough to run another 10 years. You know what happened? Not a damn thing. It ran another 10 years, no problem. So they did a safety review and they were like, you know what? Let's extend it for 1 more year. And of course, nothing happened. It ran fine for another year. So they did a safety review and they were like, you know what? Let's extend it for another year. You know what happened? Nothing. It ran fine for another year. So they said, fine, let's run it for another year. What's the worst that can happen? Well, a tsunami. So it took a massive earthquake at first. You know what happened? Nothing. Nothing. The reactors went into idle mode, effectively. The backup generators kicked in, and there was nothing wrong. Not a damn thing. Then came the tsunami. Tsunami hit the reactor. You know what happened? Not a thing. But the problem with the tsunami is that it raises the water level about 10 meters. And the one thing they forgot to do was to waterproof the building where the backup generators, the backup diesel generators, were running the cooling of the reactors. So the diesel generators flooded with water. They shut off. The reactors were no longer cooled. They overheated, melted down, and caused an explosion. Well, not really an explosion, but a small one. That's Fukushima. Not uranium. Diesel caused it.
Wow.
Yeah. Uranium's safe as fuck.
All right. Well, on that note, what is your 5th asset?
The thing that uranium's going to generate its power for. Nickel and cobalt. Now, mining may be devastating to the ground. Once it's out, we could still put a lot of effort into recycling. That industry in battery recycling is very young. There's a lot of gains we can make there. And electrification of the world will continue. While uranium will be good for baseload power, we'll still use renewables for peak power. And the best way to buffer those on the grid is just massive battery banks. It's just basically brute forcing it. It's fine. Plenty of material on the ground. Lithium is quite prevalent. So we'll just build a lot of batteries. We'll finally get that economy of scale to really make EVs affordable for everyone. And it's just going to happen. Now, everyone focuses on lithium, but batteries actually contain more nickel than lithium. So you can't make a battery without nickel. So that's one that's going to do very well in 2021, 22, 23, 25, 28, 31, 35, 40. It's going to do fine. The other one is cobalt. And the reason why I tie them together is because I actually own a Australian junior nickel and cobalt miner because they advertise that they want to build ethical cobalt, because that's the problem with cobalt. It's mined in Congo. yeah, it's not that ethical. So I put my money where my mouth is. I found a company that is already proved that they can make battery precursor materials, and they're now expanding to be a producer in Australia, and they mine nickel and cobalt in Australia because the majority of supply of cobalt is in Congo, but it's not all the supply. So I also figure that China, which has not that much problems with violating human rights, is going to go mainly for the supply in the Congo. So the rest of the world, especially during conflict, are just going to have to find some cobalt somewhere else. And I know they're working on cobalt-less anodes or something like that, but that's years away. We're still going to need it. And rather than fucking up even Africa even more, how about we just find some additional supply, huh? And give those kids their a nice living wage or something.
I'm with you. So we're about halfway through. Are we on to number 6?
Sure. Yeah. Since I just talked about how the world's electrification is inevitable, let's talk about oil. Oil's going to do very well as well, simply because peak oil is real. Everyone seems to ignore it, but that's only because the US has been basically delaying the inevitable by just throwing mountains of junk debt at shale companies because they wanted to do the Amazon model to the oil market, just generate enough market share, corner it, jack the price up. Well, that didn't exactly work out, did it? So the Federal Reserve is now bought the highest interest rates junk debt ETF specifically to bail out shale, which I also predicted, by the way, at the beginning of the year, simply because they have to. Because if shale goes, the entire junk industry goes, and well, that's just going to collapse the economy with it. But shale has a problem. It requires $80 a barrel. So, like Rick Rule says, the cure for low prices is low prices. Shale's going to stay half shut down and heavily subsidized until the price goes back up to 80. Which, even though it's been creeping up, it's still going to take a long time because there's still supply glut, and OPEC is not cutting anymore because all of the Middle Eastern countries have giant budget deficits. Even though oil is cheap to pump for them, they've been living the good life for so long that even Saudi Arabia, which has a pump price of like $20 a barrel, they need about $85 a barrel to plug their budget holes. So production is going to stay muted until the glut clears from the whole COVID thing. Now that Europe is on the second shutdown, it may take a little longer. However, towards the end of next year, it should mostly be cleared for sure, as well as the natural gas supply glut. Half of shale will go bust. The other half will grow more efficient, like always happens, and will survive with subsidies. So that's just going to start creeping up the price again. And if there's a major conflict, like a US-China war, it immediately explodes. Because, of course, oil does well in war. It explodes, craters a little bit, because people always overbuy, humans never learn, and then it's just going to slide up. So if there's no conflict by the end of 2021, I would buy oil. I probably will rotate some of my silver and gold weddings into oil.
Yeah, we talked last time you were on about how these politicians who are calling for an end to oil are delusional. And I think that's what a lot of people are, why they're scared of oil, because they see like California saying, in 10 years, no more electric cars.
Well, aside from gas cars not going anywhere anytime soon, simply because, again, you need economies for scale for the EVs to drop below 30K. Tesla tried. They couldn't do it. Heavily subsidized, by the way. They burnt like $25 billion of investor money to get to this point, and they couldn't do it. So it's simply not time for EVs yet. Simple as that. But aside from EVs, because everyone seems to focus on these fucking emissions, do you have any plastic in your house? Because all of that's oil. All of it. Every single plastic piece you look at, all of it came from hydrocarbons in some way or form or shape or another. If we don't use oil in cars anymore, well, humans never learn. We'll just use more plastic. Now, it may not end up in oceans, but that doesn't mean we won't find new applications for plastified oil, which help us in future endeavors. I don't know, plastic spaceships or whatever, plastic space hotels. We'll find some way. Humans always do. One thing I won't bet against is human innovation. So we will find another use for oil. And of course, since it's a fossil fuel, we'll just keep using it. It'll grow less and less prevalent. Price will go up. Simple as that. So we've done enough commodities, I think. My point is made. The commodities will all do well. Some will do better than others. Iron will lag at the bottom for sure. But the moment the war breaks out, iron does well as well. So there's commodity upside plenty. I wanted to talk about something different because everyone just stretches these lists. I wanted to add plenty. Shorting scams or zombie companies. Now, a good example, Penumbra. There's research done on companies all the time. And if the market is so manipulated as it is right now, you can be assured that Wirecard, Tesla, Penumbra, all these, Nikola, actually, the garbage truck order collapsed of Nikola just earlier today. So or yesterday, they're down quite a bit. There's plenty of these scams to still go around and more to be found. So just keep your eye out for good research by good people who are just exposing these scams. And as long as interest rates stay at zero, money will be aplenty and more will develop. And every time one is found that's looking like it's really going to go down, well, just short it. There's nothing wrong with shorting. From an ethical standpoint and moral standpoint, there's nothing wrong with shorting, nor does it add to selling pressure, because if somebody wants to short something, they lend the asset. So the asset first must have already been bought by someone, otherwise it couldn't be lent out. Naked shorting, so doing it without an asset underlying, has been illegal since 2008 because it was a big driver in making that crash worse, so it's been illegal. So there's nothing wrong with shorting, and if you find some sons of bitches like Penumbra who sell defective brain catheters which blow up in someone's brain vessel and kill them, if I had the money when I learned of that, Penumbra was still way above 200, I would have put millions into shorting them, because that just doesn't fly. Now, I don't like making money off people's misery, but some companies just need to die. And this is one of them. Simple as that. Even if it's not killing anyone, something like Tesla, well, Tesla's going to collapse. Obviously, there have been many people who have shorted Tesla in the past. And personally, I would have shorted the stock split. But I also would have closed that short. The moment it was announced, they would have added to the S&P. However, that's it. That's it. I mean, what's Elon Musk going to do now to pump the price? The addition to the S&P was always an option because he failed it earlier in the year. So it was inevitable. It got announced. It's happened now. What next? Well, the last thing we had that looked forward for Tesla was Battery Day, and the stuff really the cobalt less anode would improve performance by like 5%. Really? No, it wouldn't. No, it wouldn't. You're using a superior technology and you're replacing it with an inferior technology. It's not going to go up. It's going to go down. That's fine. That's fine. There are legitimate reasons for doing that, such as ethical mining. But it can't improve in performance. Or if it can, only after long iterative research, meaning the first non-cobalt anode is going to be like 10% less efficient. The second one, 5%. The third one, 3%. And maybe they would make a breakthrough. And the fourth generation can be 1% more efficient than the last cobalt anode you developed. And that's great. That's progress. But we aren't there yet. Nowhere close. So yeah, I don't see Tesla pulling through for another 2 years. It would be different if the economy was good, because if the economy is still humming along like in 2019, no one really cares. Let's be honest here. If a scam makes a lot of the money on the way up, no one really cares. The people who get caught in the Ponzi scheme, they don't really care. Not until the whole thing collapses and there's no greater fool. But if you are one of those people in a Ponzi scheme who's been getting 20% returns for like 7 or 8 years, and you get out 2 years before it collapses, you're not going to complain. Well, maybe afterwards, but then the money's already made. What are you going to do? So, and of course, there's the crypto market. Bitcoin's got to go down at some point. Tether is, well, it has to collapse. It's that simple. It's an exponential scam. Their annual printing rate this week, after they've been in a lull for a long time, was 50 billion a year because they printed 500 million in 4 days. So if you annualize that times 91.25, you get it 50 billion printed per year. And one tether is $1, so they're printing $50 billion a year. It's most certainly the biggest counterfeiting scam in history. And on the 17th of July, they were already ordered to turn over core documents by the New York Attorney General. They appealed this, and that appeal was recently, December 7th, denied. The short of it is the judge laughed them out of court. They already started with this appeal was so badly made that normally we won't treat this seriously, but we'll make an exception, and then he continued to rip it apart. So now Bitfinex, who owns Tether, has to turn over their core documents and their core administration, and now it's only a matter of time. I don't know if they've already done it yet, but if they don't, well, that's the end of it either way. So whether my prediction was Tether killing the Bitcoin wasn't really Tether killing the Bitcoin. It was just Tether selling all the Bitcoin on this balance sheet at once in a liquidation sale or in tranches. That was going to depress the price of Bitcoin below production costs, just like with uranium, for an extended period of time. And just like with uranium, you get consolidation and the independent miners go away. Since most of the mining is already happening in China, and China has the lowest electricity costs, China could very well end up with a 51% control of the Bitcoin network. The moment that happens, faith disappears in the currency, because that's all the entire thing about Bitcoin was. It wasn't centralized. Once the Chinese controlled, it's centralized. So it will collapse in price and become worthless. That was the prediction. But with hyperinflation, that throws everything for a loop. Because hyperinflation is psychological and has nothing to do with supply and demand, it might very well be that if Tether collapses when hyperinflation has already started, that the market can actually absorb all of its Bitcoin. And the asset will just go up, because in hyperinflation, it doesn't matter if something has value or not. Sounds really weird, but it doesn't matter. All that matters is that you can't print it and it doesn't deprecate. Now, Bitcoin doesn't deprecate because it's a virtual asset. It's the same as a bar of gold. It doesn't interact with anything. So it's a non-printable, non-deprecating asset. And it might very well go to the moon and everyone ends up holding it, except that hyperinflation ends at some point. So when it does, and maybe currency goes back to sound money, say we go back to a gold standard, well, Bitcoin is going to go to zero in a day, because everybody's going to rotate out of Bitcoin into the new sound money standard. Bitcoin is not sound money.
So are there any crypto coins that you like, or do you think they're all kind of worthless?
Basically, by the law of averages, I don't know how many crypto coins there are right now, but the last time I checked investing.com, it said it had 4,125. On that many crypto, I can assure you there are about 4 or 5 that have real world applicable value. Labor added value maybe, or time added value, some sort of real world value. The problem is there are 4,122 or 1 coins running cover for those 4 or 5 good ones. I don't know if it's any of the top 10. I don't know if it's any of the top 100. It may be a coin that just started out yesterday. Maybe a coin that's a month old. Maybe a coin that's been old for 6-7 years and everybody has forgotten about it, but it's still trundling along on the bottom. And they've been making improvements in the shadows while everybody was pumping Bitcoin. And then when Bitcoin collapses, they're going to be like, yeah, we're still here. No, did nothing to us. No, we're completely different. And then everybody piles into them and they become the new Bitcoin. That's very much possible. If there's just no way to tell which ones are the ones that'll live. And there will certainly be a very big mass of people that are all going to be thinking that they found the ones that are going to survive. And I'm more than happy to let the mass figure it out for me. And once they have, and there's about 4 or 5 left, I'll invest.
Okay, and just one thing on Tesla. Yeah, so it's pretty much the opposite of an early stage investment. It's being priced, in my opinion, as a monopoly on the electric car market. So no one's pricing in competition. So I'm with you that it's very top heavy right now.
Yeah. Well, it's just a matter of perspective. I mean, Tesla may be the opposite of a early stage investment when it comes to buying the stock. But when you think of shorting the stock, it's actually a very early stage investment, right? Because many people have tried shorting the stock, but many people have been wrong because, it's still going up. So timing that short, considering Tesla has already gone parabolic, that means it would have to grow at an exponentially larger rate to keep justifying this. It's already bigger than every other car maker combined. It can't keep growing. At some point, they have to go down. They are overbought. Maybe they are the future. All right. That's the thing about my arguments. I can abandon my arguments and I could just accept somebody else's. All right. I'll accept the Tesla crowds or the Tesla cult. Well, it's a cult. I'll accept all of their arguments and I'll say, all right, Tesla's the future. When's the future? Is the future today? It's not, is it? Future tomorrow? No, the future's not tomorrow either. Battery Day said there's nothing coming in 2021. Oh, they have plenty of promises, but that's all 2022 and onwards. Even Elon Musk said that. Well, that's fine. It can still be the future. I said, I accepted your argument. Tesla's the future. But the future is clearly more than 2 years out. And it's trading at a combined market cap of every other automaker combined. And it's worth more, or it's somewhere the same. Now, again, it goes to the argument of there's plenty of uranium in the ground, but there's not enough above ground. Well, Tesla might be the future in the future, but it's not the future now. Now it's a shit company, which is lagging in sales and being crushed by the Volkswagen ID3. Now it should be trading at 1,300 years PE. It should be trading at like 3.
It is not anywhere near where it's at right now.
Yep.
Oh, got it. Cool. So how about number around 8?
8 would be more shorting, because scams of zombie companies are one thing, but those are inherently invaluable companies. There's plenty of stuff that usually has value, but now due to impending doom has lost it. So in this case, specifically shorting bonds and currencies, because that's not something you hear every day. Shorting bonds, really? Yeah, Canadian dollar and the US dollar, the euro will crash as well. My recommendation is the ruble, because the Russian ruble is currently backed for about 82% by central bank gold. Now they have sold some central bank gold, so I'm sure it's going to go. It's gone down somewhat, because people still think the ruble's tied to oil, and oil is considerably lower where it was at the start of the year. So the ruble's still around 89 euros per ruble, and it started the year at like 68. So regardless, it's still around 80% backed. The M1 is around 80% backed by Russian central bank gold. So, which is about like 400 billion of gold or something. Well, the US M1 went up with 800 billion, double that in 2 weeks. So, I'd rather stick with the ruble at this point. Now, none of the currencies are good. If we go back to a gold standard, it basically means that the ruble loses about 20% of its value, which is much better than the 94 or 95% that the US dollar would lose at this point in time. But it's still not perfect. Why not buy the gold yourself? However, many people over the course of history have gotten rich by shorting currencies that are about to hyperinflate. Richard Cantillon, the one of the Cantillon effect, He actually got very rich by shorting the livre in the South Sea bubble. So he just, he did many different things to make money on that. And go look into the man's life if you're interested. But a more recent example would be George Soros, who made his billions breaking the Bank of England. Well, he did. What did he do? Well, he shorted the pound, and he was right. If he had been wrong, he would have been the laughing stock of history. But he was right. The pound dropped, and he made a shit ton of money. Plus, the FX markets is the one place where you find a lot of leverage. So if the Canadian dollar really is going to hyperinflate, especially since it's only been going up against the US dollar, well, then shorting it would be one hell of an opportunity to make a shit ton of money. Because you have to realize that going from 100 to 10 is the same gain as going from 10 to 1. And from 10 to 1 to 0.1, or to 1. And from 1 to 0.1. And from 0.1 to 0.1. And from 0 to 0.1 to 0.1. And if it's hyperinflation compared to current value, it is really going to go that far. So you're just, at some point, if you get out a week before the top, you can have gains that are in the trillions, maybe quadrillions even, especially if you use leverage.
Right. So my understanding of currencies is that they're all kind of relative to each other, strength-wise. So in order to short a currency, it would have to fall relative to another currency that would go up, right?
Yes. However, technically, if you buy a gold bar, you're shorting currencies because gold is money in itself as well. However, the most important part to remember is that not all currencies will hyperinflate at the same time, even if a bunch of them go. The best example is Austria during the time of Weimar inflation, because Austria went 6 months before Weimar Germany went. And I read a article, I think it was posted by Alistair McLeod of goldmoney.com, that spoke of Weimar Germans going over the border with Austria and spending their Weimars buying up entire city blocks worth of houses and laughing at the Austrians and making fun of them and their misery 6 months before their own currency exploded. So I expect a similar thing to happen to Canada and the US, because the US and Canada will start hyperinflation, which has already begun, around the same point of time. But because the dollar is the world's reserve currency, the market for it is exponentially bigger than Canada. So even though it's already hyperinflating, nobody notices it. Maybe food costs in America itself has gone up, but China hasn't noticed that its dollar holdings have gone down in value. They know it has. That's why they're buying up copper and strategic commodities like crazy. But the rest of the world they aren't thinking about it yet.
That sounds good. How about number 9?
Right. So something completely different. Tech juniors. That sounds completely insane, considering we are in a massive tech bubble that eclipses even the tech bubble of 2000. However, it is especially because of that reason that I say tech juniors are the opportunity, not just of 2021, but in the next 20 years. Reasoning for that is very simple. If you look at the top 20 or top 50 companies in the tech sector on the top of the bubble in 2000, they are mostly different, if not completely different, from the top 50 companies in the tech sector right now. Microsoft is still alive. Amazon was around, I think. Basically, Google got started in 1998. So in the first tech bubble, I'm sure they've gone up a little bit, but nothing compared to Alphabet now. And Yahoo was giant back in those days. And these days, they basically rarely use them for stock information, and that's it. So it stands to reason, considering humans never learn, and technology continues to develop, and we are on the cusp of the 4th industrial revolution, AI, robotomization, and complete automation. Well, the companies are going to do the best in that sector and create the next tech bubble in 20 years. Right now, are very small junior companies with maybe a market cap of like 10 to 20 million. And if you invest now, you can just ride it all the way up. The point, obviously, is finding these companies. But you're never going to find them if you never look for them. If it's like $1 billion, it has too many eyes on it, and it's never going to be the one in 20 years. It's going to be the one maybe next year, but or maybe not, because again, if the Nasdaq crumbles and Tesla is going to bring it down, then well, all those $1 billion companies are just going to go back down to 100 million. But no, it's the market caps of below 50 million. The same, actually, as you would invest in a junior silver miner right now because of the commodity bull run. Well, those tech companies exist as well. They just haven't been discovered yet. Again, all the money, if you want to be an early stage investor, has to be made in areas where nobody's looking. So if you see a market cap that's just too big, well, then too many people are looking. If the liquidity is good, then too many people are looking. Being good at finding value means you have to be able to clear the shit from the gold down in the dirt, because everything that looks nice, yeah, people already found that one.
Yeah, this one really excites me because it's, if you can catch the next big tech wave and get in early, you can do extremely well. So what are the next big trends in technology? Because that is a very valuable question if you get the answer right.
Right. So after the WEF has collapsed and it doesn't matter anymore, people really can focus on really automizing everything, literally everything. The way we code now is we literally write code after code after code, line after line after line. We have computers to debug it for us, but it's basically just a spelling checker. Let's be real here. We are far, far, far away from that Star Trek future where we can say, computer, give me a standard 3D model, male. No. 1 meters 90. Yeah. Give him dark hair. More muscles. No, stop. Not too many muscles. Come on. No. Tiny down. Yeah, that's right. AI like that isn't even close yet. Alexa, no. That's just literally an if statement. Just a lot of if statements. And that's what AI is right now. But they will figure it out. Again, don't bet against human innovation. They will figure it out. So if you can find that company now that has already started programming AI in a completely different way, outside of, all right, we'll set a goal and we'll let the computer fail its way to the goal, well, that company is just going to do very well in 20 years. Now, then there's robotics. Right now, robotics is very specialized. Meaning a production robot on an assembly line can do one job only. And if you change even a millimeter, if you knock that robot off too hard and it gets off axis, it loses its shit. It can't do anything anymore. It's just going to weld air. So naturally, there's just going to be a lot of gains to be made there if somebody's smart enough to figure out to put a camera on the damn thing and just have the cars roll by on a non-set schedule. Everything right now, as far as robotics is concerned, is in order. And this is something most people won't know because it requires you to be into computers for a long time. The early CPUs actually ran commands in order, meaning that if a command didn't arrive in order, then the entire CPU just spent cycles and cycles waiting until that one command actually arrived in the way it's supposed to be. So it's very rigid. At some point, they figured out of order execution, meaning that if your CPU has one instruction that needs a bit of data that needs to be fetched from memory or something, then that's going to take a while. But instead of just idling the time until it has that data, it can continue to execute instructions in a separate thread. So that's basically the first form of multi-threading. That is out of order execution. Well, for robots, something similar will develop in the future. Basically, rather than have a robot that always needs to be the car in exactly the right spot at exactly the right time, or it's not going to be know what to do, it's going to be able to adapt. So instead of the same car rolling down the assembly line, you can have 5, 6, 7, 8 different models rolling down the same assembly line and purely produce based on demand rather than betting that you're just going to sell that many cars.
Great. Yeah, no, that's huge. Really important. I'm going to do a lot of research on that. So robotics and AI. Agreed. And that I've never heard that analysis before, but you're right. Like the biggest companies now were babies back into the 2000s, and everyone was kind of ignoring them. So
yeah, and the 2000 companies were babies in 1980.
Yeah, huge.
So it's just going to continue and gone onwards. You just need to look forward instead of buying something that's gone up 1,000 times already.
Beautiful. Totally agree. How about number 10?
Right. So I think people are going to laugh, but so far I've only picked stuff that's obvious to me. So let's pick some contrarian opportunities. Why not? The first one is tea. Now, why tea? Very simple reason. Again, because in 2008, when I was making my first Virgin predictions, I didn't look at tea. Why? Well, I didn't think of tea as a commodity. That might sound really stupid to people who've been maybe trading tea or just been thinking about it as a commodity for a very long time. But if you're not used to thinking of something in a certain way, you don't. So I don't think for a long time, I didn't think of coffee as a commodity or cocoa or tea or non-foodstuffs, livestock, or I don't know, bean bags. Everything that's produced is a commodity. You just have base commodities, refined commodities, and production commodities. Well, tea is in effect a base commodity. It's a plant. It's a fucking leaf. So it is something you can just buy and sell. And if you go right now to Trading Economics and you find a tea chart, you go to all, so it goes back to the peak of December 2009, tea was about 523 per, well, whatever it's traded in, bushel, kilograms, I think. So it was 523 back then in 2009, and it has been in a bear market ever since, which is a really long bear market. It's even since 2015, it's a very nice, equally sliding line down over the tops of every what on the way down. But there's also like a trend line at the valleys, and that trend line has completely been disturbed this year. In fact, the pattern after, say, August 2020 looks nothing like the pattern before August 2020, which makes me tell, well, it's going to head into a bull market. Makes sense because tea is actually a very low cost pleasure in life, if you will, that people can afford even during times of hyperinflation, because governments around the world at this time have completely forgotten it, but people have morale, all right? If you don't take care of morale, they're just going to end up killing themselves. So one other way to keep morale up is to give yourself little pleasures, such as a bar of chocolate or a nice hot cup of tea. So I don't expect tea to do that badly as a commodity in hyperinflation, simply because of the general crisis environment, and tea's function in that as a quick short-term relief. And since it's just ended its bear market, it should do well. Now, I don't think it'll go up 1,000 times like silver or gold will. But again, the effect of compounding is very important. People always look for the big price. They always trade for the big numbers. And that's nice. But it is, in effect, consistency that makes you rich. I'll show it you right now. If you can double your money every single year for just 10 years, so we're not talking 500x, you're not talking 50x. That happens all the time in penny stocks, 50x. We're not even talking that. I am talking 2x. Every single year for 10 years. You start with 1,000. First year, 1,000. Well, first year you earn, you double it. So first year, 2,000. Second, 4,000. Third year, 8,000. Count with me now. 16,000. 32,000. 64,000. 128,000. 265,000. 412,000. A million. You double your money 10 times in 10 years. You start with 1,000, you end with 1,000,000.
So you're saying tea will just benefit from the commodity boom, and right now it's really cheap, and no one thinks of it as a commodity, so it's just been flat to down for like decades.
Yeah.
So it's time to get in now. How can you possibly play tea? I've never heard of that.
I'll tell you, I have no clue. Because I've just not done research in it. I'm looking at a chart. The price chart tells me it's going to go up eventually, and the pattern has changed. So eventually might very well be now. How you were to play that, I don't know. Maybe invest in Pickwick, the company. I wouldn't even know which stock ticker that is. But it's very simple. Listen, I know I'm getting more and more famous now, and people look to me for tips like this. I have to Google this shit too, you know. It's not like I'm fucking omniscient here. I'm looking at a chart that goes up when it's gone down for a very long time. I'm like, that's interesting. How about I Google tea companies? The price chart tells me it's going to go up. So now I need to do research to find a good company that produces tea. Maybe I get lucky and there's actually a company that's producing tea in a novel way and that's getting started right at the bottom of the bear market. So, I don't know if you know of Philips Senseo, you know, those round coffee pads. Mm-hmm. Well, that's a new way to sell coffee, and that just happened out of nowhere at some point. If somebody makes those Senseo tea pads or whatever the fuck and sells them at a markup, that's going to do very well if tea also goes up at the same time as a base resource. So I don't know if that company exists. Maybe somebody is smart enough to make it. But like I said, I need to Google that shit too. So, tea is going to do well now because I think it's going to do well. But yeah, just do your own research.
Right. And maybe it's an agricultural space. Look up that, like different, maybe certain agricultural companies have a tea.
Just go, first off, just for any of this, just go to tradingeconomics.com. Go to the commodities list. It's under markets. Then you got a whole list there of all types of commodities. Here, look, agricultural, soybeans, wheat, palm oil, cheese, milk, rubber, orange juice, coffee, lumber, oats, wool, cotton, cocoa, rice, canola, sugar, tea, corn. Just find one that has a long-term price chart near the bottom that still has a use today. Don't invest in horse carriages. And wait for it to go up. Find a reason for it to go up. Decide when that reason is going to happen. And invest. I still have one more contrarian opportunity. Shorting Rhodium. Well, that is very simple. I don't really know what rhodium does in the industry. Of course, it'll have a use, but it is very simple. You shouldn't trade on price and price alone. Price should only be there to inform you. However, if the price has informed you and the price is telling you something, you still need to listen. Now, if you look at a long-term price chart of rhodium, you will find that it is approximately between, with modern inflation, let's say between 600 and 1,000, more or less. It can go up more than that, but that's the historical average. So in 2019, it bottomed at 1,125. After the 2000 bubble, it bottomed at 1,100. And now it's 16,000. Now, for some sort of reason, and I don't know why, more people have noticed this as well, rhodium seems to run up and spike tremendously right before an end of a business cycle. So it went up in February of 2000. It got to a peak of 2,400 when it used to be 910 just a few months later. And then the tech bubble burst. So it went down to a bottom of about 500 in 2003. Then it ran up into the stock market crash of 2008. Well, not even then. It peaked on July 7th, 2008 at $9,750. Imagine that. And it bottomed a few months later at 1,265. So I hope nobody wrote that one down. It went up a little in the commodity bull run, but that's really interesting because it kind of peaked in May of 2010 at 2,700, and then it started going down even long before silver and everything peaked, all the way down to a bottom of about $644 in 2016. Now, this is a very clear pattern. I don't know why, but before a economic crash at the end of a business cycle, rhodium starts riding up. And then when the crash comes, it starts crashing down and it goes down immediately. Because in March, on March 9th, it was still 13,000 and change. And a few days later, on March 23rd, it was 8,000. But because the Federal Reserve started the printing machine and went Super Saiyan with it, currently it's at 16,650 for rhodium. So it's very clear, whenever this madness ends and the stock market does crash, rhodium is just going to follow it down to its long-term average of about 1,000. It's just a matter of when. And if you have plenty of margin, now that it's 16,000 and the average long-term average, including inflation, then it should be about 1,000. This is a 16x short. So this is quite an opportunity there. You just have to be careful that you time it right, because this thing has a tendency to spike just before the peak. So you're going to get stopped out if you do it on the wrong day. But if the peak has happened and you know for sure it's now going to go down because the entire economy has turned south, shorting rhodium is a good idea, all the way down to 1,000, and then I would buy it.
Excellent. So I've heard you allude to an asset that will do better by huge magnitude than all these other assets that you've mentioned.
Yeah.
What can you tell us about that today?
The bonus assets. It is my project that I've been working on. It is now something that is so good, I was willing to give up my hard-earned independent reputation in a second. Now, I'm still very much independent, but I am now going to be perpetually affiliated with these people because it's just so fucking good, man. Oh my God, I really did it. I really did find the next Bitcoin. Only it's not Bitcoin, obviously. Naturally, I can't say anything about it yet, but what I can reveal today, what I do want to reveal, is that starting next year, January 4th, 2021, Deso is going to return to the gaming world. I'm going to reboot my Twitch stream, twitch.tv/Deso Games. I'm going to do a few test streams to make sure everything's up and running. I'm going to play a nice economical game called Off-World Trading. The company is lots of fun. And the timeline for now is set that on January 9th, so the Saturday after I've done my test streams, I'm going to release my uranium miner that I've been selling information on for free. Because I want to prove to everyone that I know value. And once people see why the reasons I sold this information to just about anyone who was willing to take it, then they will understand that the next asset, when I say it's going to be much better, is going to be much better. Now, naturally, there's quite a bit of hype around this already. So I'm going to make the stream and the asset announcement stream private. So sub only. You will need to take a sub to my channel because honestly, I'm looking at a future where money is no longer going to be an issue for me. And I just want a big Twitch channel. And I have a good asset right now to force that. So I'm just going to. There's more to cash in on just money. I want to cash in on reputation as well. But I can promise you, it will be just $5 for a tier 1 sub. Don't get a tier 2. Don't get a tier 3. It's not necessary. Just get a tier 1. Support the channel. And I am going to blow you guys' minds. Not just because I found this asset, but in the manner in which I understand it, the manner in which I see its future. And that I can almost guarantee that this thing is going to be bigger than big. This is really, really going to be an asset for the ages. and I can't wait to reveal it to you guys. I will do it publicly eventually, but my followers, my supporters, the people who have been carrying me mentally this year need to be rewarded. And I want to reward them first. I'm building a sales team, and I'm hoping to coordinate a media blitz. But I will be the first one to announce it on my stream because I brought everyone in. I brought this opportunity, and I want to thank everyone accordingly. So, if you want to support me and get thanked, just get us Twitch sub to my channel, twitch.tv/DesoGames. Let's have some fun. Let's play some games. Let's talk about economics. Every gaming stream I do will be basically an Ask Me Anything stream. Just keep me asking, and you bring something interesting to me, I'll look at it. And later, I will do a more structured stream after the asset's been launched. Because naturally, after the launch, I'm going to do a few very public interviews to really get the word out. And then I need a fucking vacation. It's never happened before in my life that I've not played video games for an entire week. I can't even remember missing 3 days. I am so fucking stressed out just to get this done in time. Because this is going to go up next year so much, and I need to beat hyperinflation. It's already started. Oh, God. But less than a month. Less than a month, it'll be out for sure. If I have to delay it because I need to coordinate things with my sales team, it'll be delayed for just a week. And instead of the, the 16th, it would be the 23rd. But I'm not going to wait until January is over, and I'm going to make sure it happens before the last delivery day in January, or the first one of the February contract of comics as well. So that's the timeline here. 4th of January, Deso Games returns to streaming. 9th of January, I'm going to give away my miner for free to prove that I can spot value anywhere. And then the week after, or possibly the week after that, I'm going to release this asset to the world. I'm going to announce it to any channel that will have an interview with me. I'm going to accost some random people to get some. And you guys are really going to see something amazing.
Excellent. You've given us so much to digest. I have a lot of homework to research these ideas. Can't wait. How can people reach you to learn more about this?
Well, again, twitch.tv/DesoGames. That's going to be launched soon. If you want to know more about economics, articles on economics, I will write more next year. Obviously, I'm incredibly busy right now. That's why I haven't written anything yet. Well, not anything anyone else can read. But I will write more in 2021, and it will all be posted for free on desogames.com. And if you want to reach me on the daily or find more research that I do that doesn't make it to my website because it's just updates to stuff I've already talked about at length, come follow me on Twitter. I'm most active there. And if you got any questions, you can reach me there too.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.